The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials right now down 249. Nasdaq's off 83. S&P's down 28. Gold contract up $6.40, trading at $13.13 an ounce. We got notes and bonds, folks. Guess what? All-time highs. They're breaking a B point. They get the volume behind the move. You're talking about big action here. You got the 10-year at up 22, 124.02. 30-year up a point and a half at 148.22. If we take a look at the 10-year right now, so the 10-year is yielding 2.443. Now, this ABC structure will get you 2.1. And
is that all-time highs too? I'm not sure. Maybe the years. I don't know.
Last 12 months.
Okay.
Yeah.
Okay.
Yeah. So the bottom line is that you're going down to 2.1. Now that'll take a few months for sure. I mean, you're not going to go from 2.5 to 2.1. But bottom line is that that's where this baby wants to go.
The inverted deal. I mean, so we're just it's highs within the last 12 months, but we haven't seen an inverted yield curve for the 3-month, 10-year since 2007. So that's where you really start getting into all-time territory, as in that is quite a signal when you say to somebody, I'll give you X percentage, whatever it is, right? For if you give me your money, I'll give you, for 3 months, you give me your money.
Right.
I'll give you this rate.
Right.
If you give it to me for 10 years, I'm going to give you a little less. It's
know.
like, whoa, what does that mean? And you better deduce what it means, because it means recession fears, for sure.
Big time.
Yeah.
King Dollar's up 143 ticks, 96,130. That struggle continues, man. The Bulls and Bears, the Bulls will not give that up. You get the euro at 112.96. The yen is trading at 110. That's helpful for the gold market for sure. That's getting stronger. You get the pound at 131.82 to $1 US. Our phone number is 877-927-6648. We get over and take a look at this S&P. This is, as you said in that opening, your news at 10. This was fast and furious, man.
Oof, all of them, man. 20 points in the S&P. You're in, in the span of 20 minutes. That's a point a minute for 20 straight minutes. I mean, just remarkable stuff.
And if you want to see, folks, how we trade in a one-world atmosphere. This is how Europe traded this morning. Europe was down fast and furious, man. And Europe looked like it should have broke topside yesterday. Okay. And they just went south, man, quick. And it's like...
What's interesting is the market's actually got a little pop in the first 5, maybe 10 minutes. And then 9:40, it seems, is where the cascade began.
Just unloaded it.
Yeah, so you're up there at 28.51 in the S&Ps, and in the span of 20 minutes, you're down at 28.30. 21 points in 20 minutes. The day is young, like we say, man, and so 20 points in 20 minutes, we got a lot of minutes left in the day.
Oh, there's no doubt. And if we go overseas and take a look at overseas, what you're going to see here is that, the FTSE's down 1.6%. You get the DAX down 0.9. Now, the DAX is not bad, and this was down further today. But if we go over to the FTSE, what you're going to see, of course, this is, this is selling. That's what it is.
Why don't they like a 2-week delay?
Seriously, man. So you're right back inside the lower range again, and the FTSE 72.61 was the number. It's like, okay, broke topside. And what happens on a break topside, folks, right? Now, particularly this one. Look at this one. So the break topside was at 72.61. You made it up to 73.70. Most times when that happens, you go to the high first before you come back. This is like because if you get away from the consolidation, which we did, it's like, okay, man, you're only like 75.52. Yeah. We're at 73. It's like your probability goes up then. And if you have a failure, which we have a failure like this is heavy, man. I mean, because this is like someone changed their mind in the middle of the staircase and said, man, I'm getting out. And I'm getting out right now. So big number. We go to let's go look at this 10-year. So I'm going to do it this way. I'm going to get there it is. I'm going to get the yield up. Wait till you see this, folks. This is like amazing. So when we take a look at the 10-year yield now, most of the time, I only started this yesterday, most of the time I'm always looking at the price, right? But I found the yield.
Of course, price higher, they're inverse relationships, right? Higher price, lower yield, vice versa.
Now I'm going to put this on a longer basis so you can see how this is set up.
Sure.
You get a decisive break of the 2.54 on the yield.
And what are we there? I'm just sorry. So we're on a weekly, and that's January 4th, beginning of the beginning of the year. Sure.
That was the highs that we just took out.
Yep.
Right? And when we do the ABC structure, you get down to 2.1, and guess what? 2.16 to 2.01 is the low from September of 2017.
Okay.
So it's like, okay. What has happened here also, folks, and this is important to understand, we got into the, like when you're coming down, okay, the support, you know, that's 2.6, 2.
Yeah, we're in that range, sure.
That should have been some good support.
Yeah.
It ate right through it, you know. So
yeah.
Your probability is that's where we're going, and that's a big number. And if we go and look at the...
Yep, right there. Right, yields? Yep.
No, this one I'm going to want to do different. Yeah, this one I want to do, I'm looking for the U.S. generic 30-year I'm looking for. So... Now, this is different. I'm going to do this one.
This is price, though, again.
Yeah, I'm going to do this on price on the 30-year. The reason I'm going to do this is that you can see where this thing wants to go. So you get a break top side here on this 148.27. We've hit 148.24. So we haven't broken it on the continuous contract yet.
Yes.
But this baby here is set up somewhere up into like the 155.
Okay.
So there's some low rates coming at us, man.
How about Nike? Nike pulling back today, right? They came out with earnings last night, I believe.
Yeah, they did. They did come out with earnings. Down 382.
Yeah.
Let's see what they had to say. I think the earnings were pretty good, too, but it's just, guess what? They're selling it off. I got it yet? No. There we go. The gross margin beat. The, let's see. Revenue was...
Pretty much in line.
Yeah, 9.6. They did 9.6 billion. Gross margin estimate was 44.7. They're doing 45.1.
Yeah, earnings per share 68 cents. Estimate was 65.
Yeah.
But there's a lot in these reports in terms of forecast. We will dig into it at the break because there's something to have Nike pulling back 5%, right? Let me tick up a little bit and see where just what they're talking about. Yeah, so 7% rise in quarterly revenue.
It's a monster, man. It's like,
oh, they are a monster. And you got March Madness going on right now. Started off yesterday, of course.
Oh,
all those games.
Won. Congratulations.
They sure did.
Yeah.
They squeaked it out, to be honest, though.
Did they?
A little dicey. Little dicey.
I didn't know they won 3 out of the last 4 years.
2 out of the last 3, I believe.
2 out of the last 3. Okay.
Yeah.
It's a big number.
Oh, it is. This year, not to call it a miracle, but they're not the team that they had before. So we'll see what they do.
Yeah.
You got Duke out there. Watch out for those Dukes.
Oh,
Duke and Zion Williamson. Hopefully Nike doesn't have any more shoes. I wonder how many staples they put in his shoes.
I bet they don't.
Yeah.
Some of the high volume equities out here. You got Micron down $1.40. We got let's see, Nike's the big one. You get Ford off 7 cents. No big deal. J.P. Morgan. The financials folks are getting hit.
Banks, right?
Yeah, they're getting hit.
Yeah.
And that's about that spread. You know, and 4 days, J.P. Morgan just went from 108 to 101. Look at that.
Yeah.
That's.
Yeah.
That's
I think it's I mean, something about the worst 4 days in years and years because 4 days like that to cut 8, 9, 10% off of J.P. Morgan.
Major company.
Right.
Yeah, totally.
Yeah.
Dow Industrial's down 219, Nasdaq off 68, S&P's off 24. Stay right there, folks. Come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow off 202, NASDAQ off 62, S&P's off 23. And let's go inside the Dow, and I'm sure Boeing's going to be showing up here, right? Yeah.
We got some negative action. Well, this is going to be, right?
Yeah, this is where the differential comes. Okay, so there you go. Boeing's putting 35 negative points, Nike 25, Goldman 22.
There we go, right?
Yeah.
Thanks, Nike, Boeing, yeah.
Yeah, and if we go over to Boeing, the news is not being kind to Boeing out here.
As it shouldn't, man.
Oh, this is like intense, folks.
Yeah. So we got the news this morning, and just talking about, so they're getting cancellations already in the billions. You know, you got Indonesian Air canceling its $6 billion order for 49 planes. Quite a number, man. And then this story that we were talking about, right, that came out yesterday. So for those that didn't check it out, and really, I'm sure you may have heard of this story, but if you didn't get a chance to read it, Times story, get over there and read it.
You got to read this story.
You got to, because it really just speaks to the industry practice more that's startling, right? That these planes, they have optional features. Now, optional features, comfy seats, yeah, I'm cool with that. Not when it comes to safety. And then you look at the FAA. Why aren't they mandating this? We already got a lot of questions for this, especially in the light. So 2 of the features that could have helped these planes and could in the future were sold only as extras. Yeah. And so this goes into, and I'm just going to slide a little bit as we get in here. So sometimes optional features involve aesthetics or comfort, like premium seating, but other features involve communication, navigation, or safety systems and are more fundamental. And that should be like in quotes, because the FAA obviously doesn't think they're fundamental for whatever reason, right? Otherwise, they'd be mandated. So many airlines, especially low-cost carriers, we'll get into this though, because it's not just the low cost.
No,
We're gonna name one of them in
Right.
particular. They might, save some costs, which would make sense. If it's not mandated, if you're a low-cost airline and you're trying to cut corners wherever you can, FAA says it's not needed for safety. So what they have to do with, and we'll get down to, so the software systems, they're taking readings from two vane-like devices called the TAC sensors. And so these determine how much of the plane's nose is pointing up or down relative to the air.
Yeah.
And when they think that the plane is pointing up at a dangerous angle, it's going to think you're going to stall, right? Because you don't have enough wind coming at you.
Yeah.
So that's where it's going to push the nose down to pick up the, in an effort to prevent the plane from stalling.
Right.
Well, what's happening is that these sensors are not operating correctly. That's what they believe.
Yes.
And these types of safety additions would have alerted the captains to that possible scenario. So Boeing's optional safety features in part could help the pilots detect any erroneous readings. One of the optional upgrades, the angle of attack indicator, displays the readings of the two sensors. All right, the other is called a disagree light, and that's activated when the sensors are at odds. So you got two sensors, they should be reading identical.
Yes.
And that's just basically telling you there might be a problem.
Right.
So Boeing's going to make some updates, and they're going to make that software, and they're also going to make the disagree light standard. So they're going to have the disagree light standard, but they're not going to have actually the angle of attack, like the actual reading might not be standard still. Now, this is where we really get into the kind of some of the startling stuff. So the angle of attack indicator will remain an option. All right, neither feature was mandated by the FAA, and all of those jets, of course, are grounded.
And I bet, I don't mean to interrupt you, but I bet after this story goes out, folks, so let me tell you something. That part, they're saying is going to be optional. That's not going to be optional anymore. People are going to go out of their mind.
They should.
And they're going to call the airlines and ask, what kind of options do we have on this plane, even when they get going again?
They should, man.
Yeah.
I don't understand how that is an option in the light of just planes literally falling out of the sky, because pilots, pandemonium's breaking out in that cockpit. You don't have time to think clearly sometimes. So, and then to get down, so. Yeah, so add-on features can be big money makers, all right? In 2013, Boeing was starting to make the 737 MAX. They would expect to spend about these
airlines.
Yes, the airlines buying them, about $800,000 to $2 million on just the options, all right? And that's only 5% of the total plane price. Boeing charges extra, for example, for for a backup fire extinguisher in the cargo hold. Now, the important part, past incidents have shown that a single fire extinguisher may not be enough to put out flames that spread rapidly through the plane. How is that an option if they're saying one isn't enough? Do you want that second?
And here in Japan, it's regulated that they have to have it, but the FAA, no.
Again, just remarkable,
so
right?
if you think we get the best planes or the best airlines, when you finish this, you're going to see that...
Or the best regulatory body. That's the scariest part, right? That's why they're there, so that these companies don't nickel and dime your safety. That's the reason why regulations exist. So, and they have a number of different... There's so many things that should not be optional. Many airlines want the cheapest airplane you can get. Just an aviation lawyer, former engineering test pilot, and Boeing's able to say, hey, you could have bought it, right? They got a little bit of, deniability, plausible deniability. So here's where we get into, let's get into, so yeah, Boeing and its airline customers keep them basically secret, as you would expect. Because guess what? When it gets out that they are nickel and diming and not even suiting their planes with basically should be standard safety equipment.
Because you feel good on a new plane.
You should, right. Airlines frequently redact details of the features they opt to pay for or exclude them from their filings with financial regulators. They're not hiding them from the FAA, but they're hiding them from like their public company documents to make sure. So from one redacted filing in 2003, you got a previous version of the 737 that you had to pay $6,700 extra for oxygen masks for its crew. How is that? Almost $12,000 for a weather radar system control panel. And here's where we get down. So you have it would make sense. You say, oh, these foreign airlines, these discount, Spirit, whatever the discount is in the U.S. No, that's not the case. So 3 American airlines that bought the 737 MAX each took different approaches to outfitting the cockpit. American Airlines, 100 planes. They got 24 already in the fleet. They bought both. Good for them, right? American Airlines. They got both the angle of attack indicator and the disagree light, all right? They're all. Southwest ordered 280 of them, 36 already in the fleet. They had purchased the disagree alert option, and so this is where I guess we were going over this a bit, right? So they purchased the disagree, and they originally had installed the angle of attack indicator above the pilot's head, probably a secondary part of the cockpit, and they're now going to place that in the main computer screen. But they had both of them, nonetheless. Then the culprit of them all, United Airlines, folks. 137 planes, had 14 of them, and they said no thank you to either option.
Amazing,
because money talks and cash plays, and that's all that matters, right? Pretty remarkable.
Now listen to this quote, folks. This quote is like sick.
Go for it.
Because so a United spokesman said the airline does not include the features because its pilots use other data to fly the plane. Really?
I would wonder who that spokesman is and if they're a pilot, because I doubt it. But nonetheless, it doesn't matter. Greed is
cutting to the chase,
quite
folks.
a motivator.
Guess what?
United Airlines, right there.
137 planes, ordered 14 selected. That's gonna change.
And so this is what's also amazing is that when it was first rolled out, this software system was only taking readings from one sensor, leaving the system vulnerable to that one sensor failing, a single point of failure. That's like a crucial thing that they go over, single points of failure, right? You want redundancies. And they didn't figure out, number one, that you need two. So, you know, one theory in the Lion Air crash, the one previous, is that they were receiving bad, faulty data from one of the centers, and the nose was diving, and they couldn't figure it out. Nonetheless, United, man, shame on them.
Amazing.
Yeah.
877-927-6648. Give us a call, folks. I don't know what's going on in y'all world. We have the Dow down 222, NASDAQ off 70, S&P's down 27. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 220, Nasdaq's off 69, S&P's off 25. And yeah, the heat in this Alzheimer's deal, there was another stock in Japan. When you see this, they must have been tied up with, let's see.
It's not letting me. Something's, what did I just do? Is that, no,
okay, we'll put it on the screen again. So,
why can't I?
EISAI,
EIS, yep.
EISAI.
There we go.
There we go. So this stock
excuse me,
trades in Japan. So after Biogen, this thing opened down. It was trading, what, 9,000 yen last night, and then opened at 7,500 yen.
Yeah, so you're looking at almost 20% haircut, 18%. And so it's talking about, we'll pull the article, just drug makers trying again the Alzheimer's disease by targeting a compound in the brain known as beta amyloid. And this week, Biogen and Eisai joined the ranks of frustrated companies that spent years nurturing the expensive experimental therapies and ultimately fell short. Many scientists and drug developers, let's see, so, okay, I thought I was no, wait, I was looking for this article. For some reason, this screen's broken. I can't pull it over.
Oh, hey, let me see.
Maybe just go to the top, because it was in the top. No, okay. There we go. So, experimental therapies that ultimately fell short. Many scientists and drug developers are now asking whether it could be time to find another approach to treat the pernicious memory-wasting disease. So they were really trying to focus on these targeting the beta amyloids, and it looks like that might just be the wrong way. And I'm not a scientist, I don't.
No,
but that's
I heard analysts on, and that's why, folks, what was happening here is that it came down so dramatically because it has to do with the approach of how they're looking
they might
at
have to dramatically change things, right?
Which is
like
huge,
start
man.
almost from scratch, which is a shame.
Right.
And that's where, so the brain's been a black box for drug developers, but focusing on the beta amyloid has long been viewed as the best hope for treating the mysterious ailment that affects millions of Americans and their families. For many, the hypothesis became an article of faith, motivating billions of dollars in research spending and putting thousands of patients through clinical trials. And they're just talking about it's not really science, it's kind of like hope, right? I guess they weren't getting the results. Yeah, it's not science anymore. It's turned into a religion. So Biogen and Eisai discontinued two late-stage trials designed to evaluate the efficacy and safety of the drugs.
Look at that.
Which
cost them $830 million over 3 years, folks.
Yeah. And the results showed that the drug was unlikely to help patients, the company said in a statement, and the discontinuation wasn't related to safety concerns. So beta amyloid, it's a protein that collects in the brain, and people with Alzheimer's, it clumps into plaques.
Okay.
And drug makers have pursued the idea that by clearing the beta amyloids with the drugs, they might stop the disease from building those plaques. And it's still not known, though, if the protein is the actual cause of what's going on. I mean, it might just be not related.
Wow.
Yeah, the latest failure, and there's been a few of them, unfortunately, right, in terms of, I guess, following the unraveling of a similar experimental beta amyloid drug from Merck, Eli Lilly, and Pfizer. So it seems like they were all kind of trying to focus on this type of methodology, and it just may not be the case, unfortunately. Yeah. It's a bummer, for sure.
It is.
To say the least.
Yeah, it hits
a
lot of people, no doubt about that. Let's go and take a look at the silver market out here. So let's see if we get any action. Silver's picking its head up a little. We needed more volume out here yesterday. Yeah, so you get a sideways move. We get $15.42. Yeah, it's still working sideways. This March 1st, bottom line, it's going to need a lot of juice to get over this March 1st. The gold contract did it, and you can just see, though, but there's still a stopping point there. That, I think the top of that is 1316. Yeah, it's 1316. You can see. And what we will have this week is this: is that you're pushing into that level, meaning the supply line with volume. So that's a bullish occurrence. But guess what? you got to take it out, man.
And can we jump around? So that's the April contract. I saw when you went to the CRB, though, that they had gold trading at 13.18, I believe. So we're probably crossing contracts here.
Yeah, we should. I should
Number
be on
23.
the M.
23.
I should be on the M,
So
I think.
we're approaching 13.19.
Yeah,
Quite a number one.
Yeah, I should be on the M, too.
Okay, perfect.
And so what happens there is that then you got 13.23.
So similar. That's right. Because I was thinking,
that's what ends up
they're all
happening.
correlated, right? Where
Right.
it's still away from that high.
Yeah. And you can see, though, which is pretty cool. Yesterday, that was good volume yesterday. You get 61,000 contracts, running into that level.
Yes.
It's going to be about this, the dollar, the Brexit. Hey, so 2 weeks.
Yeah.
2 weeks, folks.
So much time.
Oh, my God.
What are they going to do with all that time?
I don't know.
They don't even...
They got to get by the Speaker of the House of Commons.
Yeah.
That's I can't wait to see how they're going to do that. I suspect they already got that figured out because they're coming back 2 weeks.
Oh, you think they got it figured out? They got everything. No, I'm being sarcastic.
Theresa May better have it figured out.
She better, man. 2 weeks is like that.
Oh, my God. That is.
How about the pound? Can we pull up the pound with that type of action yesterday? Because, man, it's remarkable that they can't get it done in 3 years, right? But just give us 2 more weeks and we'll solve all the problems.
No, totally.
How does that even make sense?
So yesterday we went from 132 to 130. We're at 131.84. So technically, it's not a bad setup.
What have we been saying, right?
Right.
Buy those spikes lower, man. And that's a day yesterday. We got that spike lower, and boom, talk about a rebound.
And when you take a look at it, that's we've been going up since that. What's that? January 3rd.
Yeah.
There's the moving pieces over there. And it seems like we have the European Union starting to play hardball out here. So that is going to get really intriguing, in the aspect of
and I was kind of saying from the beginning, as in they have all the leverage, the EU,
right?
Because the alternative is hard Brexit.
Right.
So you're in a it's when you're negotiating, you want to have some leeway and some power behind you.
Right.
And I don't get what their leverage is in terms of Britain. What's your leverage? The leverage is you want us to be a trading partner still, right? That's the leverage.
Right.
But they're still already going to be a trading partner. That's not going away. So the EU's like, yeah, we'll get there, and the EU doesn't want to create an opportunity where other countries think it's very easy to leave. So that's what you're very much dealing with here, with the EU playing a little hardball. So 2 weeks, 14 days, 10 business days.
Yeah, 10 business days. Let's go take a look at, I don't know if Lululemon came out with numbers or not. I know it was
down a little bit, huh?
It was down last night. Let's see what they have to say.
Downgrades.
Oh, just a downgrade. Okay. Yeah, so, I mean...
Everyone's not buying $100 athleisure right now today,
except that what happens is that everyone that's not in the space wants to be in this space.
Okay. Yeah.
It's so funny when you.
Who wouldn't want to sell sweatpants for $100, right?
Totally.
I know they're better than sweatpants.
And have people walk around with them.
Oh, for sure.
When you look at Lululemon, folks, okay, it was a $4 stock in 2009.
Yeah.
And revenue-wise, you're at. Look at that. $1.8 billion in 2015, $3.3 billion this year.
Yeah. Yep.
And still growing by leaps and bounds.
Yeah, I mean, just most of that coming from the U.S., almost $2 billion of revenue in 2018, growing at 15% over 3 years. Quite a number.
It is.
For sure. Because you go back 3 years, 2016, they were still pulling in more than $2 billion. And they're growing that U.S. number alone at 15%.
And they've always been bringing money to the bottom line. Look at that profit.
Yeah. And Asia. I wonder how they're plowing into Asia, man. If that's China, if that's Japan, where they're at, because
32%.
You start seeing that number, growing at 33%, man. That'll be big.
Monster.
Right?
Stay right there, folks. Tommy, I'll come right back. If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials down 234. Nasdaq is off 82. S&P is off 29. Let's go to our man Dave in Boston. What's going on, brother?
Good morning, gentlemen. How you making it?
Morning, Dave. Yourself?
We're keeping it together. The last time we spoke, I had some puts on the Qs, and as you might recall, the IWM and the transports were pulling back and gave me a nice little ride on the Qs down. So I find myself today long on the TLT, and we're watching banks take these hits. And I've heard you talking about the 10 and 30 year. I want to get your take on the TLT as to, would you add a position to that on a pullback?
So let's take a look at it. So the TLT, folks, is the ETF structure, the iShare of the 20-year Treasury bond. And that's a 20-year plus. So the way this works on a 20-year plus is like this. So you have the 30-year Treasury bonds, right? And what they put inside this this ETF is anything that's over 20 years. Right. That's how this works, okay? Yeah. So,
and that's just so you can see the expirations, I think they go in there, right? 45,
yep.
40, and this is like 2040, 2043, yep. 2046. So it's kind of a plethora of different from 20 to 30 years.
It is, exactly.
Pretty cool, yeah.
So when you take a look at it, now the TLT is going to need 21 million shares for a confirmed ABC structure up, and that's going to be really hard to do out there today, that's for sure. That being said, you know, the 10 and the 30 are in ABC structures on the way up, and I expect the TLT is going to be up here at this, you know, let's see, so you got...
Yeah, I was going to say, where are those ABCs, just so I can even follow them? Is that your B point?
The B point's 123.86.
Okay, call 124, easy math.
A is 112.
124, so 12 points.
$12. Get you 130.
130, yeah.
Yeah, so 130 is the number there.
And that is almost the high from 17. What are we looking at? 129.56.
Right.
So right up to a similar area. Yeah.
You know, so depending on how you trade, I mean, I don't like buying breakouts.
The other side of that to keep in mind, Dave, is that is this a daily we're looking at? Weekly. Okay, I was going to say, because we just went from 118.60 to 124, 6 points in the span of 4 weeks, which is quite a move.
So it was a lot.
Yeah.
But my take is that rates are going down. You know, I mean, when you look across
the... you're on that.
Yeah, when you look across the world, folks, okay, and it's been for a long period of time. Our rates are tremendously higher than the world. It's like, okay, if you take that, there you go, right there. Here, this is the news this morning, okay? That's the 10. Oh, is it the 2 or the 30? Because this was negative this morning.
Germany? Okay.
Yeah. That's Italy. 1 second. Let me just.
Sure.
Is it the 30 that went negative? No, not the 30.
Maybe the 2? Close.
No.
That might have been it.
Oh, that might have been it.
Because we're at 0.02. Might as well call it even.
Yeah,
so 0.02, Germany. It's probably one of the shorter term.
So, you know...
Basically 0% on a 2-year in Germany. Yeah, because of the growth, right.
You know, I mean, it's pretty amazing that we're here, but it's not amazing that we're here in the context of how money revolves around the world. And, you know, we're a first world country and we're paying 2.4% this morning, and yet France is paying 0.3%. It's like, really? So.
And even with our banking sector, that index, the last few days anyways, and even the contrast versus like the Qs, they're just heading in different directions, and just based on interest rates, it seems.
Yeah.
And that's how banks make money hand over fist. Okay, so they make the largest part. Well, I'm not sure what the largest part is. One of the very large parts of how banks make huge money is the spread, okay? And that's the spread between what it costs them for money and what they lend money out for.
Yeah.
And that has been compressing dramatically because of the fact that rates are going down. But that's not the only thing. What has happened is that there's a lot of, you could call them shadow banks, you could call them a million different things. They're really not shadow banks anymore, because you get the Blackstones of the world that are not a bank, but guess what? They're operating like a bank with hundreds of billions of dollars, actually $2 trillion.
Yeah.
And their competition.
We also spent the bet. We spent the better part of last year with the banks on the rise with the projected rise in interest rates.
Yeah.
And how quickly things change, right?
There's no doubt. That's all we heard on a continual basis, right? Yeah. And listen, it makes sense.
And just to hit, it was the 10-year. Earlier, the German 10-year Bund had dropped below 0, so they're probably oscillating back and forth.
Right.
But you had that earlier today, and there is your.
And you know, this is where we've gone down to these rates before the market has even pulled back. If this market pulls back, like I think it is, let me tell you something. This rate drop will go so fast, folks, it'll be insane. You know?
I know, it's crazy right now. But so do you think there's a little bit more leg in that ETF then, you think?
Oh yeah, no, I think there is. No, I think the TLT is going. Yeah, I think most times what ends up happening is this: A to B equals C to D, a straight line moves. And if we take a look at this, if you take a look at the TLT, November 2018, you're at 111. That's a good straight line move, okay?
Yep.
Now we consolidated for a long period of time.
Yeah.
So if this is the C to D, it's going to be a straight line move. This thing's not going to wait, And I know that's intense, but that's how it normally shakes out. So how long did that take? That take November to, 2 full months.
Yeah.
Yeah. So 2 or 3 months.
And then we sat there for about 3 months, going from January, February, March, and now we're on the upside again.
Right.
Yeah.
And it's really powerful, folks, because we sat at the highs. We didn't pull back. I mean, this is, I think, a 0.382.
Yeah.
And that's just one day we were down.
It was close to 50, to be fair. I mean,
Yeah, that would have been 117. We were down there for 1 week. We got to 118.64.
Yeah.
So, so lower rates are coming at us. And
Free money, baby.
It looks
get that
like...
refinance out, get that car loan. No, seriously, right?
Yeah. Well, hey, guys, thanks for your help. Thanks for being there. Thanks for everything you do.
Thanks, Dave.
Dave, thanks for the call, man.
Have a great
weekend.
The Dow down 262, NASDAQ off 92, S&P. My take on this, folks, this is going to be a nasty day out here. And I'm getting that from Europe. I was watching how Europe was trading early this morning, and this selling out here, for only 10 minutes of 11 Eastern Standard Time, you're talking about some heavy selling.
And I was just pulling in, this is the 10-year, and I thought, we're not, this was the bar at 950. We're back right at, what is the high? 124.03. We're sitting 124.03. I mean, I just saw it ticking up. I thought we were actually making highs as we said it.
Listen, man.
Because we were just at what was this? 123.30. Nothing. I mean, that's 5 ticks since the last, half hour. We're still high. As in, it's still going. That was my, it's still going.
And you know why, folks? It's still going because there's so many people that have shot the bond. That's, another reason. Do you know what I mean?
Yeah.
And it makes sense. It doesn't even make sense. I mean, if I didn't think in 2008 or 9 that interest rates can never go back down again, let me tell you something. From that point on, I said, you know what? If you just stay with the technicals, man, because it was a solid case for interest rates to go up.
I'd say so.
But
right.
guess what? They're not. Stay right there, folks. Tommy and I are coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And as you come over to our website at TFNN. You're going to see right under featured content, our man, Mr. Basil Chaplin, the opening call. He is going to be doing a live subscriber event April 3rd.
You got it. So a week from this coming Wednesday, about 10 days out there. Anything goes, the stock market's key phase. So Baz will be in there with subscribers to the opening call. You can sign up, get a 30-day money-back guarantee, nothing to risk. That'll take you through the next 30 days, at least, through this webinar. And he's going to be in there talking about kind of where we are standing right now in the market. He's going to be talking about the technical tools, the Chapman wave that he's using, and how you use those to interpret where it's going, the outlook for this year into next year, the current risk versus reward setups that he's seeing that may play out, and then specific sectors, specific stocks, going into the FANG stocks as well. And that'll be archived for subscribers. You can check that out right on the front page. Get in there, sign up, get that whole workshop a week from this coming Wednesday, 5 o'clock right after your program. And, of course, that will be archived. You can watch it as many times as you'd like in there. Encourage people to check it out for sure.
So let's go over, I mean, the NDX, folks, has been and it continues to be the strongest index out here. And, even today, you're back at $1.77, but guess what? It's going to need a lot more than this to break down, Now, the small caps, they're done. Well, I'm not saying that they're done. That would be bad luck. But bottom line is that they have been the weakest indice. I expect what you're going to see out here. They're right on the verge right now. Watch this. This is pretty cool. They're right on the verge of breaking a little consolidation that they did this morning. Yeah, see, like right. Did it just do it?
I think we did.
Yeah, 152.44. Yeah, we just did it.
And that's going back to a couple days, Wednesday.
Watch out below, folks.
Oh, boy.
Stay right there, folks. We got Fast Market coming up next, and we got our man, Basil Chapman. Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Wow, look at him, folks.